Yes, hello and welcome to the Business of Property podcast. I'm Stuart.
And I'm Simon.
And we are both property people running our own property businesses. And this podcast is just us chatting about the reality of anything and everything property. And before we start this week, just a quick piece of news. We now have a newsletter, which we are going to start sending out on a regular basis. And that will contain all of the resources and anything we think is of interest to property investors. And if you'd like to join us, please just head on over to thebusinessofproperty.com and there'll be a newsletter tab there or a pop-up. And of course, the link will be in the show notes. So just click on that and that'll take you straight there. As well as always, you're able to tweet us at BIZ of property. Okay, that's the preamble out of the way. Now, Simon, one thing we were just getting into before we hit the record button was property reductions. Now, as we know, there has been a shed load of instability in the market recently, and we're not going to get into that. We think there's been enough chat around the merry-go-round, the carousel, and the absolute mess that has been our supposed government of late. So we're not going to get into that. But we wanted to come at the property angle, really, because some of the data that your software, PaTMa, has been pulling out is particularly interesting with regards to property reductions. And of course, we're going to share all of these graphs in our email newsletter. So just a quick reminder that you can now get that in a much better format. So Simon, how about we just start with, the first sort of key piece of information, which is the number of reductions we're seeing of late compared to recent times.
Yeah, so the week before we are recording, the number of property listing reductions reached almost 20% of the listings that were live that week. So almost 20% of them were reduced during that week. Now that strikes me as quite a lot. However, one of the new graphs in PaTMa's weekly sort of market stats and update email is this data, but going back over 2 years. So if you look at it just over 6 months, it's just an upward trend, really. I mean, there's some wobbles, but mostly an upward trend of more and more reductions each week. But it's really interesting to look back over 2 years because it gives you a much wider perspective, and you can see any sort of seasonality differences and things like that jump out at you. And it shows that we are actually at the highest number of reductions, percentage-wise, of the listings there that we've seen for 2 years. So 2 years ago, it was at about 17% of properties being reduced per month. This was, and that seemed to be sort of on a downward trajectory. And of course, that 2 years ago was sort of the end of 2020. So we're in the height of pandemic times at that point.
And just to be clear, so when we say on a downward trend, what we're saying is that it was at 17%, but fewer properties were being reduced on an ongoing basis.
Yeah. So back in October 2020, there were about 17% of properties that were listed saw a reduction. In November 2020, that was only around 15%. By December, it had gone down to 12-ish% of properties. So there were fewer properties being reduced as time went on. And over the last 2 years, we hit a low around sort of 8% of properties per month being reduced. And that was in early 2022. And from that point, it's then sort of been gradually creeping up. And then recently, it's been going up much faster, of course, with the recent issues that we're not going to talk about. It's accelerated even further. And now it is up to nearly 20%, certainly 19%, and heading towards 20%. And of course, that's higher than it has been for 2 years.
Yeah, and I think the striking thing for me, and for everyone, please do get access to the graph, because I think when you look at the trend, the line trend, and you see the steep climb of the number of price reductions, that's what really jumps out. And just like to add the caveat that, of course, we are fully aware that the dropping of an asking price doesn't mean that you're getting something below market value. And I say that because we hear those words so much in the property circles, BMV. It could mean that the property was massively overvalued from the start, and that a drop in price still keeps that property overvalued. But for us, what's quite important and interesting is the trend that's happening, meaning that people are clearly having to readdress what they are marketing properties for, or equally the value that they think they're going to get for them. And of course, we can talk about that because I've seen a number of properties that are on my watch list being reduced in value. Now, they're on my watch list because I felt they were overvalued and wasn't going to proceed any further. However, I would say I've had between 7 and 10 properties come back into my inbox that have now been reduced in price. They're probably still around what I think the market value could now be. The interesting thing for us as potential investors is that once those properties have been reduced, that doesn't necessarily mean it's going to be the price that we offer. So for me, it just means maybe there's now a softening of the market for us to think about getting into.
Yeah, something that sort of ties up with the price reductions is, of course, you say listing prices, because the listing price doesn't necessarily reflect sort of later agreed sale prices. And the data shows that listing prices haven't really changed yet. I mean, maybe they won't. But new property listings coming onto the market are still coming on at about the same level they have for the last 6 months or so. So they perhaps went up a little bit over summer and perhaps have come down a little bit since summer, but only a very small amount. If you look at the trend over 2 years for listing prices, you can see that they have definitely gone up over the last 2 years, but they don't seem to have, not significantly anyway, started coming down again. So it seems that properties are still being listed on average at about the same sort of price, but then some of those are not being picked up, not getting the interest that people want, and are being reduced. So yeah, I don't think we're into any of the scary sort of property crashing sort of scenarios that some people are talking about just yet. But yeah, as you say, it's definitely getting a bit softer.
Yeah, and the chart that we are just looking at now as well is that Simon's referring to is the new listing price per month by number of bedrooms, and this splits out the listing price essentially by size of house. And when you're looking back at the 2-year period, for example, you can see that, let's say 1-bed prices were a little over £260,000, for example, and actually that price went down. The listing price went down over the course of the 2 years, but then has climbed back up to similar levels. But when we look at the higher number of bedroom properties, so from 3 to 4 and 5, you can see that. So, for example, 3-bed properties that started at around the 300k mark are now priced somewhere between 320 and 340. So you can see there's a marked increase. So that also is really interesting in terms of understanding the market trends that we kind of can talk about anecdotally because of COVID and everything else and people wanting certain bedrooms. So I think that also provides some really good context.
Yeah, I very strongly suspect that the 1-bed drop is really a reflection of the difference between flats and houses. So that graph includes all properties.
Yeah.
Whereas if we split it out, I think we would see that houses probably held their value better through the pandemic than flats did. And of course, because flats are weighted towards the smaller number of bedrooms, they have a disproportionate effect on those per bedroom sort of stats. Unfortunately, I don't have a 2-year breakdown of houses versus flats. So maybe I'll need to add that into the email in the future so we can talk about that next time. But yeah, I suspect that's what's behind those sort of droppings of the 1-bedroom rates.
Yeah. But again, coming back to the sort of theme at hand, the other stat really, which was quite interesting, was around the time of the mini budget and the sales fall through, showing that. And again, unfortunately, we had to withdraw from a purchase as well. So I've experienced this firsthand, and I'd like to also caveat that although we had to withdraw, I found another buyer for that property, and so from the vendor's perspective, they are still getting a sale. But from our own side, because of all of the things that we've talked about the last few weeks in terms of mortgage rates and so on, we had to pull out. But the chart that you've got here, Simon, really just shows that we weren't alone in having to do that.
No, indeed. There was a big spike in the number of properties falling through. So this is a raw number rather than percentage of what's there or not there or whatever. But yeah, there was an increase of some, I don't know, 1,000 and a half properties falling through per week compared to sort of the normal rate, just in the 2 weeks after the mini budget. Interestingly, the rate of fall throughs seems to have dropped down again. So it seems like all of the people who were panicked by the instability and or the rising rates have done they're dropping out of the sale process. And yeah, hopefully it will be a little more stable again now. So that might point towards the market really not heading towards a sort of crash situation if there isn't an ongoing increase in fall throughs.
Yeah, and for context for those listening, I mean, on average, it looks like pretty much there are 500 or more relistings a week, regardless of what's happening. I mean, there are
5,000.
Sorry, 5,000. 5,000, which makes more sense given the numbers. But yeah, in my world, that's quite a lot. I wouldn't have, without having access to the, number of transactions per week to hand. But that still seems pretty high.
Yeah, I mean, it's across the whole of England, and there are hundreds of thousands of properties currently listed on the property market across England. So it's a relatively small number, really.
Yeah. And I'm just trying to work out in percentage terms of the week of the mini budget or the 2 weeks of turmoil, as we might want to call it. But you can see that essentially the number of relistings sort of went up by 20 to 30%, which is pretty dramatic when you think about it. That's a big impact on what people were thinking about and doing in the property market, and just shows you, of course, we can't, there are going to be a number of factors at play for each of those situations, but clearly the biggest one is going to be the lack of understanding of what was going to happen, the fear around the interest rates and the actual impact of those said interest rates to mortgage rates and so on.
Yeah, indeed. I mean, a lot of people will have already had mortgage offers sort of locked in, but then people who had just started the purchase transaction perhaps didn't, or people who were looking for more niche finance and things that might take longer to work out and things, perhaps they hadn't got that sorted yet, or perhaps in some cases the lenders really decided that they just couldn't lend on some agreed offers already, and they forced changes. But then, of course, people could just have changed their mind because they got spooked and worried.
Exactly, and
so even without actually having to pay a higher rate.
And I know personally at least a few instances where that happened. And to be honest, in certain situations, I mean, I like to think that we can sit down and look at the numbers and just get clear on the numbers. And if the numbers are looking okay, then we carry on. However, the softer elements of, well, we don't know where these increases are going to stop. I think in terms of the things that we as property investors have had to put up with in the last few years, let alone the last month, but the uncertainty for me is the biggest issue. Is the uncertainty is Section 21 staying, going? Section 24, do we have to worry about that? Interest rates were rising, and it's no wonder. And I think that there is a defence for every investor to just say, do you know what? I am going to pull out, because why would you, go into a situation where outcomes can't be forecast because of what is happening around government legislation and government actions? And again, we've tried to steer away from that. But I think it's, totally acceptable. And I think, the UK is in such a strange environment. But what does that mean for us as property investors? Well, certainly I know it's meant that we've had to take a step back in certain situations. But Simon, you've recently just finished a cycle of property investing. I've sort of steered away from saying completed because it's your news to share. But I think it'd be interesting to talk about your process during this time and your thoughts as you drew through the process itself to purchase.
Yeah, I'm not sure we've got long enough left in this podcast episode to dig into it in too much detail, but yeah, so I completed on my latest purchase as of recording yesterday.
Congratulations.
Thank you. Although I think I would temper those congratulations slightly. When I put my offer in for this property, it was some 4 months or so ago now, and I thought that I didn't think that I was getting an amazing deal or anything like that, but I thought that I was putting in a sort of slightly below sort of real value offer. And then through negotiation with the seller, that was talked up a little bit, and I did actually end up going all the way up to my absolute limit, which I think was my view of the maximum value that it would hold for me. And then, of course, that was 4 months ago, and the market has changed. And I now feel that I probably slightly overpaid for what it would be worth today. But this is sort of how it goes in property cycles, because there is such a long delay between putting in an offer and reaching that point of completion, be it 3 or 4 or 5 or sometimes even 6 months later, that property values do change. And I could perhaps have gone back to the seller and said, well, could we knock a bit off? But then, especially seeing as most of my real concern about that sort of cropped up in the last 4 weeks, 3 to 4 weeks, it was at such a late point that it would have meant lots of extra disruption to the process of the mortgage. And I really didn't want to upset the mortgage that was agreed 4 months ago on a 4 month ago interest rate and risk having to go through that process again at a higher rate. So I think overall, I feel I've slightly overpaid for it at this point, but that it will hopefully still be worthwhile as an investment property, certainly in the long term, and even in the short term. I don't think it's going to, well, it's definitely not going to break the bank. I fear that once I've done the refurbishment, and in actual fact, yeah, we're definitely not going to have time in this episode, but we'll dig into the refurbishment side of this property, I think, perhaps on our next episode, because I am a bit concerned about my refurbishment budget as well on it. So yeah.
Well, without getting into that detail, and the point I make though is, so you purchased this based on a set of criteria: purchase price, refurbishment price. Okay, there might be a differential there, but let's put that to one side for a second. But based on your purchase price that you agreed 4 months ago and what you envisaged to get for rent, this, regardless of what the perception of the now value of that is, that still works as the investment you looked at 4 months ago.
So yes, I don't think the rent's changed really in that 4 months. So I think the rent would be the same, and hence, although refurbishment might force a little bit of extra money to go in, the mortgage process, I had some hiccups. We've talked about it before in past episodes. I'll try and link to those in the show notes. And I have had to put more capital in. So between a bit more capital for the actual purchase, perhaps slightly more on refurbishment, my return on investment is definitely lower than I was hoping. But in terms of, is it going to make a profit? Yes, it's definitely still going to make a profit. It's not going to be running at a loss or anything crazy like that. It will be making a healthy profit of £300 a month, something like that. So, I mean, it's not doing badly. There's no problem really in terms of the actual investment. It's only really my sort of feeling that
exactly
it was perhaps slightly, I paid slightly more than its real value now.
And this is where I get to, because, and this is exactly what I was thinking about, because ultimately it is one's perception of that deal. And when I think about specifically your investing history, typically you've owned property for like 20 years. So, and if I think about, this property, I envisage you're thinking of holding for, similar periods of time, 10, 15, 20 years, in which case what we think about now, and we're all the same, by the way, because I have the same feelings, is probably just a small blip on one of your charts. And in 5 years' time, we probably won't even recollect that maybe there was a dip in, October 2022, when we recorded this, that maybe it was worth slightly less.
Yep, I think you're absolutely right. And while I'm saying now that I feel I've slightly overpaid for it, this really doesn't bother me. I'm not losing sleep over it. I'm not deeply concerned or regretting my purchase or anything like that. It's, next week, get up and get on with the refurbishment, and in a while, get it rented out and income coming in, and it will all be water under the bridge, and everything moving forwards, hopefully very nicely.
Yeah. And where I come to in this, and for those that have listened thus far, once again, congratulations. Thanks for joining us. Hopefully there's been some interesting data and insight that you can take forward for yourselves. But where I personally get to is when we look at these graphs, and please do sign up for the newsletter, and we get all of these out to you in a really nice little format. Just click on the link in the show notes to sign up to the newsletter, or go to thebusinessofproperty.com. But where I get to is when we're seeing this number of reductions, and clearly there is a nervousness in the market. And of course, yes, dare I mention the word, we are heading towards Christmas, where the market is slowing down a bit, relatively speaking. Then I think this is a good time to start having a look and maybe getting a little bit more active in research. Certainly that's going to be my thought when I look at this stuff, because if people are reducing properties, that means they want to sell them. We all know the property that's stuck on, Rightmove for so long because the vendor has a fixed idea in their mind of what they want and it doesn't move. But when people, if a fifth of people are reducing their prices, that means that those people are definitely looking to sell properties and sell them sooner rather than later. So that means that there is still a market in which we can go out and buy. Of course, we then have to think about all of the things that Simon's just talked about in terms of the rates, the new stress tests that we've been talking about. But for me, this is from a buying perspective, a good positive sign that we should start looking again.
Yeah, exactly. And I am seeing reductions come through, and I am thinking, "Ooh, that looks interesting," and "Ooh, that's slightly better priced now."
Can I just say to the people that are listening, Simon says, "Oh, that looks interesting." He sent me a property that is currently valued at 11 million that was reduced from 15. So that, that's just to know where Simon's head's at.
And it wasn't even a castle, which is my normal sort of browsing habit in that price.
It was a car park, actually. It started with CA. It was a car park.
My point that almost got lost in there was that I am starting to get a bit more excited about the sort of property that's coming through. Over the last 6 months, perhaps longer, I've been seeing lots of properties coming into the market and mostly saying, that doesn't really work for me. The one that I bought was one that was sold, fell through, and needed work, and they took an offer that was quite a lot below their actual asking price because it needed these works, and we'll discuss about how that fits with the actual value already. But now I am feeling and seeing that the properties on the market are looking a lot more interesting. Unfortunately, thanks to the stress rates, I am not currently in a position to purchase any of them. but yeah, I'm definitely looking. I'm definitely more curious and excited by the property market now than I have been for quite a while.
Yeah, and I think before we wrap up, that point there is what makes it even more interesting for me, because you're not going to be alone. Yes, it's getting more interest in the market, and then people look at the LTVs they can get, the rates they can or can't get, the stress test rate, which reduces it, which means fewer people looking actively to buy, which means properties potentially on for longer, not getting bought, which further pushes, hopefully, prices down for us, from a buying perspective. And a lot of us are often in both perspectives. So it's a double-edged sword, of course, if we want to sell. However, from an investing perspective, it's looking good. But look, we've talked about that. Hopefully there's been something in there of use to those of you that are thinking about investing. Please do subscribe to our newsletter. We've talked about those links enough. Reach out to us at Biz of Property on Twitter. And please do, if you've gotten some value from this show, leave a rating and or review. And other than that, we'll see you on the next episode.